story. We have seen all-time highs, not just in the S&P 500, but with the Canadian economy. The TSX has been hovering around record levels. We just got through earnings season. Now we have to watch what happens not only on the economic front, on the geopolitical front as well, and just broadly speaking, ask the question, how far have markets gone in such a short amount of time, and how comfortable investors feel about that? Ross Healy is chairman of Strategic Analysis Corporation and a portfolio manager at MacNicol Associates Asset Management, and has navigated plenty of market cycle in his day.
I have indeed,
nice
John.
to have you back here. What are your thoughts as we're sort of entering this home stretch of the summer 2025 in stocks?
Well, one of the real issues that I think the markets are facing, and particularly the U.S. market, is that if we look at the Standard & Poor's 500 and the NASDAQ 100, specifically, they have both risen right up to their valuation maximums that they both reached in the year 2000, which of course was the last high-tech market. Well, they're there, and those breakpoints, I think, are going to prove to be quite resistant to further, unless the market can see an expansion of profit margins, and I guess a lot of help from the Fed as well.
Which we'll see what happens in September. There's some growing expectations that we will see a rate cut. Although I will say, Ross, you talk about profit margins, just on profits outside of margins. Earnings season was largely seen as a success, companies beating expectations, and now the analyst community increasing their expectations for earnings in the current quarter. But you're talking about something else.
Yeah, pretty much across the board. No, I'm talking about like permanent improvement in profitability and profit margins. The first half, I think, was heavily weighted to the reactions to Trump and the tariff wars, and the question is, are those results from the first half going to carry over into the second half? Now, the analysts, as you say, I think 58 or 68% or something, anyway, a huge percentage, are increasing their profit outlook. But I think it's going to be a really interesting question to see whether that will actually transpire.
And the driving factors for the markets has been a few huge trend stories that maybe sort of overshadow, what the particular percentage on profit margins across the board may be. It's the AI boom. It's the AI excitement. Nvidia earnings around the corner. You're already chuckling a little bit. You did make a case. I remember we had a conversation I believe it was last year.
Yes, it was.
It was a very compelling case about why it might be a good move for investors to sell a stock like Nvidia, which did stumble for a good portion of the year.
It dropped 40% after that interview with you, John.
That's right.
Unfortunately, it came all the way back
and then
up
investors
again and went higher.
back on the train. So, I mean, what would be your comment to investors at this point who are just all steam ahead with the AI plays right now?
Well, the issue with AI is that the makers of the chips and those people who are producing the platforms for AI have been booming cheerfully ahead. But where are the users' profits? And so far, there does not appear to be much evidence that all of that AI spending is translating over into profitability. Now, I have no doubt that in a longer-term sense, it's going to be just like the last high-tech boom. It took time, but I think the front-end load has been the building of the infrastructure. It's the use and the profitability that is at question.
No, it's all fair points. The bulls would say, but Meta came out, they showed how they're integrating all this. I mean, they're spending whack loads of money, but they're immediately putting it into their ad infrastructure. and making more money that way, that Microsoft is sort of throwing this all into sort of its enterprise business and making money that way. That's not sort of a sign of success, or?
I think the issue is not what the producers of the chips and the infrastructure are doing. That's all front end loading the business. It's how the users of AI are actually going to produce bottom line. There's tremendous pressure by the executives on their staff, like, get out there, John, and use that AI and make money.
Yeah.
Doing what, please?
So how has this, what's your portfolio strategy right now then, just based on all that?
Well, my portfolio strategy is very cautious and very defensive. I'm, of course, particularly concerned about the poor condition of the U.S. balance sheet. So we have had a rather heavy weighting in gold and precious metals, and it's served us very, very well this year. They're up 50%, I think. The rest of our portfolio is kind of trudging along, 10, 11, 12, 13%, not very exciting. But, you know, in terms of where would I put new money, I have a harder and harder time because I am very concerned about the U.S. market. And I will tell you, John, that the market has a memory. And when it goes up against very, very strong resistance, as it is in two of the markets, we are very, very cautious until we see whether it's possible for the markets to actually break out or not. And we're not talking about down the road. Sometime we're talking about right here.
Yeah. Sounds like a good stay tuned.
It is very much of a stay tuned, yes. So what would one do if you had a pile of money? I'd wait and see.
Okay.
But it's not going to be very long before we're going to get an answer.
Well, we'll have you back and talk about it, obviously. An interesting fall, perhaps, on the way. Ross Healy joining us here in studio to talk about the market.